Hey folks, welcome back to the channel. Well, earnings did not disappoint. The GDP print wasn't as bad as some people thought, and the Fed gave us a 75 bips hike instead of a whole percentage point, which basically greenlights the stock market to continue going up at least until the September FOMC meeting. So those were the catalysts I was looking for. I was saying that the events last week would dictate what the stock market would do for the next several months. And because we had mostly good news, I am depositing $100,000 into my IB account, but that doesn't mean I'm going all in right now. There are still some risks around the horizon, especially short term. So in today's video, I'm going to talk about why I think the bottom of the stock market is most likely in already, and how I plan to navigate the market with my $100,000 or even more throughout the rest of this year. I am now way more bullish on the market than before. I'm probably not going to pick the exact bottom, but investing this money now is much better than putting it into the market a few months ago. So lots to talk about in this update video, but let's go over first why there's a strong chance that the market had bottomed last month in June. One thing we can look at is how strong the rallies have been during the bear market cycle. So since the beginning of the year, when the S&P 500 started to fall, we've had some rallies. If I draw a trend line from the bottom to the top of these rallies, you can see this one went up 8.8%. This one a little bit less, 6.6%. This one was really high. It's a little bit hard to see, but that's 11%. And then we had another leg up here, about 9.4%. But this most recent one here, from the bottom of June all the way to the top of this candlestick, that's 13.6%. So that is the highest bounce that we've seen so far. So because this bounce is so strong, that is one indication that we've seen the bottom of the market. And even though it could, fall from here, which it probably will, it will not likely fall below the lows of June. I mean, what we're going to have to see, but I'm pretty optimistic. Now, another reason is because sentiment towards earnings have now changed. If we take a look at Shopify, for example, on February 15th, the company reported its Q4 earnings from last year, and it was better than the forecasted EPS of 14 cents compared to 13. However, on February 15th, when they announced this earning, which is right around here, you can see how the stock basically gapped down. It went from like almost $89, and then a couple of days later, it's down to $66. So that is a huge drop. And it wasn't because the company posted less profitability or anything. It was just the market was discounting everything at that time, and any news, good or bad, was seen as negative for the stock. But now things are changing, because what I've noticed over the last week of all of those different companies that gave earnings, some of them were weak, some of them even gave poor guidance in the following quarters. But it seems like whatever the news was, the market seemed to like it. In most cases, when the company's earnings came out, even if they missed expectations, the stock would still sometimes go up. If we look at Shopify again, they actually missed expectations. So instead of earning 2 cents per share, they actually lost 3 cents per share, which is not good. And they also gave poor guidance in the next quarter because the economy is slowing down, consumers are not spending as much, and the e-commerce industry in general is not growing as fast. So there's not a lot of good news in the actual earnings report itself. But if we take a look at Shopify, what happened, and they reported on Wednesday morning on the 27th. If we look at the stock, you can see that on the 27th, Wednesday, it had a green day with a lot of volume too. So before, when the stock market was dropping, all news seemed to be bad news. But now, if your numbers come in lower than forecasted, and you say there's going to be continuing weakness going forward, well, people in the stock market, for whatever reason, seem to want to bid up the stock on that day. So I think now this sentiment has changed, and it's not only in these companies that I've been watching, like growth stocks and technology stocks. Even the financial industry is showing these patterns where it doesn't matter what the company reports, the stock just wants to go up. This research comes from Charlie Bolello, where he basically lists out the different major banks in the United States and how much their net incomes have changed compared to last year. And as you can see, when these companies reported, they're all down. Citigroup is down 27% compared to last year. Wells Fargo is down 48% net income compared to last year. However, if you look at the stocks over the last couple of weeks, they've pretty much done nothing but go up, right? So, normally the stock market rewards companies that increase their net incomes over time. But even though we're seeing negative year-over-year numbers, the stock market is still rewarding these companies. This wouldn't have happened like at the beginning of the year when everything was going down. So that's what I mean by like sentiment is changing now, and it's starting to feel like people are more bullish. And finally, the AAII Investor Sentiment Survey has been going up over the last few weeks. It reached a low point around 18 last month. So now about 28% of investors seem to be bullish on the stock market over the next 6 months. Now, there are still more investors with a bearish sentiment on the market, but there are fewer bears now than the beginning of the month, July the 6th, where over half of investors were bearish. So is it possible that we could dip below 20 again? Of course, but it's more likely that we've already seen the lows of this. And over the next few months, we can expect the stock market to move higher. So going back to the S&P 500, you can see in recent days, it's pretty much gone parabolic. So I do expect a pullback from here. The 21 EMA is this blue line here. And anytime the stock market moves way above or below this line, it tends to revert back to that line. And I would say right now we are pretty far away. So I do expect next week for the stock market to drop before continuing to go up from there. So this is why I'm not saying you should go all in right now. I'm certainly not doing that. I am going to take my $100,000 and I am buying in stages basically. So I will wait for a pullback because this recent rally here looks like it's gone up too much too quickly. So I do expect a pullback. But after that, I will probably put in a quarter of my new funds here and wait maybe a month or so, see what the stock market is doing, and put in another quarter there. So I'm going to dollar cost average slowly into the market. The biggest thing to watch out for right now would actually be this support line right here. If we get another down leg here and it crosses below the purple line, then I would be worried and I would probably hold off because the market would probably go lower. If I do a measured move here and I take this one over here, you can see we could definitely fall below this straight purple line here. And if that was the case, then we will retest this bottom again, which is right here around 3,600. In a previous video, I mentioned that I was expecting the S&P 500 to fall around 3,500. It looks like if we go below this diagonal purple line here, there's a good chance that we could hit 3,600 and maybe even 3,500 if it passes there. I don't expect the market to continue going lower after 35. So if it goes down to 35, I'm just going to put the rest of my $100,000 into the market. So that's kind of my plan with that. And in terms of what stocks I'm going to buy, it'll probably be BlackRock, Google, Amazon, Square, and other companies that I can find that seems to be good value for their price. I think I've talked about Adobe as well. That's a really good company. It's just a little bit expensive right now, but if the S&P 500 drops, to 3,600 or 3,500, I would buy a lot of Adobe at that point. Let's take a look at the QQQ real quick. This is for the NASDAQ 100. So for price movement on this one, I also expect this to pull back. You can see we have a nice upward channel here as the stock is going up. And right now we are at the top of this channel. So I do expect, at least in the short term, like over the next week, for this to drop. Maybe it'll drop back to the EMA, which is that blue line, which is here before going back up again. Or it could fall all the way back to the bottom of this trend line, in which case if it bounces up from there, then that would be a buying signal because it would be continuing to follow this channel going up. However, if the stock continues to fall below that, then I'm looking at retesting the bottom here. So short term, I'm a little bit bearish on the market. However, medium term, like over the next 3 months, I do expect both the NASDAQ and the S&P 500 to be higher than where they are right now. So although there's a good chance that the stock market has bottomed, going back to the S&P 500 here, let's talk about what catalyst can change this around. And instead of having the market continue to go up, what would cause it to fall below its lowest point in June and continue to basically hit a new bottom, maybe around 3,500? Well, I think it's going to be real estate, if anything, that is going to send the stock market lower. Now, in the US, about 20% of the GDP is made up of the housing market. So if that takes a big hit, which I think it will, then we're going to see that bleed into the financial markets, especially with higher mortgage rates. You're definitely going to see a lot of slowdown in housing demand. The other issue is the real estate crisis that's currently unfolding in China. And this is a pretty big deal, but I don't think the markets in North America have factored this in at this point. You've probably heard of China's largest developer, Evergrande, running into problems, missing payments on their debt. Other real estate developers are being hit as well. Asia's richest woman just lost half of her fortune. You can see she doesn't look very happy there. I wouldn't be either if I lost 11.3 billion dollars, and that's because her corporation Country Garden is running into some financial problems. Country Garden is a huge developer in Asia. They make tens of billions of dollars in revenue every year, and they employ over 100,000 people. So, like, who cares if the rich are getting hurt? But it's actually the middle class that's getting the worst of it, because they bought billions of dollars in properties across the country in China, but the developers have stopped building and delivering those homes, even though the people who bought those still have to pay their mortgages. So that's why a lot of people in different cities are refusing to pay mortgages now, and that can be a big problem for the whole financial system inside China. So if that leaks out of the country into North America, that could have a huge negative impact on the stock market here. So that's definitely something I'm looking out for. So that's a recap of what's going on in the markets right now, and kind of my plans going forward in the next couple of weeks. Again, I think there is short term, the market is going to pull back. So I'm not bullish in the next week or so, but medium term, long term, I am definitely looking to put my $100,000 to work. And having more capital in my IB account, I can also sell more options, and I'm planning to make at least $4,000 or $5,000 every month just from put options and call options and option spreads. And that income that I'm making from option is more than enough to offset the interest costs that I'm paying for my line of credit. So thanks a lot for watching. Good luck with all your investments, and I'll talk to you in the next one.